Okay, let's try again and see. Oh, he's okay, yeah. All our people have, they seem to have gone out again. What happened? And we announced this on the platform now.
They may be running late.
Yeah. Okay, Billionaire Riwo, please, you can go ahead. Oh, he has dropped off again. Oh dear. Wow. This network thing is a serious issue. It's a serious matter. Yeah, Billionaire Riwo, I'm so sorry. This network is not working so well for us today. What happened?
I really don't know. So can you hear me?
Yes, I can hear you now.
Okay. So we've wasted time already. Let me go straight. So I was saying the market grows in three directions: uptrend, downtrend, and ranging markets. So one thing, the first thing you do once you come to your chart, you have to determine the bias of the market. So you know whether you are looking for buys or you are looking for sells. Most times, once you go to your higher time frame, you do a top-down analysis. Top-down analysis is basically going from your highest time frame to your lowest time frame to determine whether you're going to take a buy or you take a sell. So in an uptrend, you take a buy. In a downtrend, you look for sells. Can everyone hear me?
Yes.
Okay. So while it's presumed that the market seems to always go like this up, okay, my screen, everyone, you can't see my screen, I'm coming, sorry. Um, okay, you can see my screen now, right?
Yes, we can see your screen now.
So it's presumed that the market keeps going like going up a little pullback, up a little pullback, and up again. If the market keeps going like that, everybody that trades forex will be a billionaire. That's how everyone thinks the market works, but that's not how the market works, as opposed to everyone's belief or popular opinion. How the market actually works is this: how the financial institutions, this how they trade our money, the banks and the hedge funds, this how they trade people's money. So basically, everyone, it depends on what you look out for. But me personally, this is the model I trade and the market. This is what works for me. This is the model I look for. Usually, this model is for an uptrend market. Usually, how an uptrend is characterized by higher highs and higher lows. Let's go back to the basics. This is a higher high here. This is a higher high. This is a higher low. Higher high and high and sorry. Yes. So this is a higher high. This is a higher low. this is another higher high, and this is another higher low. So that's how we characterize the trend. In a downtrend too, it's characterized by lower lows and lower high. This is a lower low, and this is a lower high. This is a lower low, and this is a lower high. So this model I use for my uptrend markets as opposed to the regular higher and higher lows. For an uptrend here, I use what I look for is a break of structure to the upside. The break of structure is basically a higher high. So I first look for a higher high, then I look for a retracement, then I look for a second higher high to confirm that we are actually in an uptrend. Saying, sorry, everybody. So, so once you start, the truth about this model is that once you start seeing it, you can't unsee it. So back to what I was saying. So this was our sweep of liquidity. This is our break of structure, and the retracement gave us our structural. So on the 1 minute time frame, these are structural. But if you go down to your 15 minutes or your 5 minutes, these are structural. Okay. Oh, my screen. Sorry about that. Okay. So this is what I was saying. So this is our liquidity sweep. This is our first break of structure. And after our break of structure, what comes next is the replacement. So this replacement gave us our structural on our 1 minute time frame. But if you go down to a higher time frame, like your 5 or 15 minutes, this was our structural. You will not see this movement because this whole movement, this whole replacement can basically be one candlestick. So you wouldn't see it as replacement. But now if we come down to our 1 minute, although it's not advisable to trade with your 1 minute, your 1 minute will only be used for confirmation for your to make your entry sniper. Don't take your models from your 1 minute, especially for those that take currency pairs. For synthetics, you might still be safe if you take your trades from 1 minute time frame. So this is the supply zone for the sell. And what do? We waited for price to come there and give us a confirmation for a sell. And this entry point is our 5 minutes confirmation candlestick. But if I was to take my 1 minute confirmation, now right now the risk to reward is 1:7.87. But if I'd come and taken my confirmation from the 1 minute, I would have entered here at the close of this red candle, and my stop loss would have been here. And just like that, your confirmation has made your 1:7 trade has now become a risk reward of 1:12 because of confirmation. So confirmation gives you a tighter stop loss and gives you a more sniper entry. But I really wish I'd be able to talk about everything today, but we have limited time. I can't talk about everything. But to wrap it up, let me give you the model. So when you are less busy, you could backtest it because this model is what has been working for me. And this is basically what the financial institutions use. Sorry. So this is for your buy. So we are waiting for price to come here. So price should come here, either here, and continue buying up. So this is our sweep of, let me label everything so that I think I will send the picture to the group if necessary. These are, sorry, not better structure, these are liquidity sweep. These are sweep of liquidity. These are our first break of structure. They are always, I'll still write the rules down. First break of structure. First break of structure. Break of structure 1. Then after break of structure 1, retracement that gives us our structural liquidity. So this is our structural or inducement. This is the buy model now. I'm going to this diagram so maybe when you are less busy, you can always go back and back test. This works for both currency pairs. It works for everything, both oil, US oil, S&P 500, anything. This model works for everything. So after your retracement, it gives you your inducement or your structural liquidity as inducement or structural liquidity here. Then it goes and gives you a second break of structure. BOS2. This is a second break of structure. So once you've gotten your sweep of liquidity, your first break of structure, your inducement, and your second break of structure, all you have to do is for price to come into your demand or your supply zone within your POI for a continuation of the trend. So you wait for price to come back down here and to continue the already existing trend. So yes, something like this. Let me draw the one for sell. For sales, this is your sweep of liquidity. As always, the first thing, a sweep of liquidity here. A sweep of liquidity. This is your first break of structure. First break of structure to the downside. This for downtrend. So this is your first break of structure. After a first break of structure, it gives you the retracements, and that retracement gives birth to your inducement or your structure. So this is your inducement or your structure here. Inducement structure. Then it goes down to give you a second break of structure. There must always be two break of structures. DOS2, second break of structure. So now we have our POI. POI is point of interest. So our POI is here. Your POI always between your structural liquidity and this high or your structural liquidity and your sweep of liquidity. So all you're looking for now, you wait for price to come from here and come back into your POI and expect it to sell from there. So this is the model for sell. This is the model for sell. These are the 4 rows. So rule number 1, sweep of liquidity. Rule number 2, your first break of structure. First break of structure. Rule number 3, your retracement to give your structural or inducements. Then after your inducements of structural, it should go down again or go up again, as the case may be, to give you your second break of structure. Yeah, these are the 4 rules. So all you have to do, your fifth rule, is just wait for price to go back to your POI. Point of interest, wherever you want to take the buy or the sell from. So these are the rules that guide it. So when you wait for price to go to your POI, then you can now wait for a confirmation as if you want to start or not. So these are basically all the rules.
Can you shift this point? Okay, yes, we can see it now. Okay, thank you.
So these are the rules that guide my trading. So you always have to wait. Sometimes it might take, if you see your setup on the 4 hours, it might take days before price reaches your POI. But trading is a waiting game. It's not something you have to rush. It's not a get quick game. You get quick fix. It's a journey. You might not get it the first time, but once you start backtesting the model and seeing it, once you start seeing it, you can see it. That's basically how it is. So this is basically what I trade. So yes. So let me run it down.
So a question, please.
Yeah, sure.
The break of structure, the 2 break of structures, so if one wants to trade on 15 minutes on let's say 5 minutes. So if you see your break of structure on the 15 minutes, do you wait for the 2 break of structure on the 15 minutes before you then go to the 5 minutes, or how do you do it? Do you see first break of structure on the higher time frame, then you go to the lower time frame to look for the lower one? So what's the process in that one when you're mixing that's when you want to go to the lower time frame?
Okay, let me explain something. That question is very insightful. For example, you might see a setup like this for your buy on the 4 hours time frame. On the 4 hours time frame. So this becomes the POI. I see a buy setup like this and on the 4 hours time frame. And then price gets here. So within this your POI, when price reaches here, there are 2 things that might happen in the 4 hours time frame. Either price starts buying from here immediately, especially for currency pairs. I've noticed that with currency pairs, or within this your 4 hours POI, price might do something like this. Price might, sorry, price might do something like this. So now, inside that your 4 hours POI, price has not given you another buy formation inside it on your lower time frame. So especially with, I think I've noticed that maybe GBP USD, if in your 4 hours time frame, this whole rectangle here is your 4 hours time frame POI, or down in your 5 minutes, it gives you another buy setup inside your 4 hours POI. So sometimes some people will wait for this to form, then they will not take their buy here instead of just waiting for price to enter your 4 hours POI. So they look for another buy setup inside the buy setup. Does that answer the question?
Yes, good. Thank you.
Okay. Okay. You're welcome. So any other questions? Because I think we've stayed a little over.
Please, do you have questions? Please just unmute yourself and then you can ask questions, or raise your hands, then we can unmute you. Wow, great. I don't think there's any questions. So thank you so very much, Riwo, for this very insightful knowledge you've shared with us. We look forward to next week. Maybe we'll look at currency pairs next week, because I believe, well, I know many of the people on the platform use they trade the currencies. A few people trade derivatives as well. So maybe next week we can look at currency.
Currency pairs, okay, that would be lovely.
Yes,
Okay.
yes. Thank you so very much. We are very, very grateful.
Thank you for having me. It's an honor. It's a pleasure.
Thank you, sir. Thank you. A big thank you to Mommy Prosper as well. Thank you very much. We're indeed very grateful. So, people, this is yet another powerful one. So we've been giving you different strategies, different ways of entering the market. You know, like I always say, you have 1,001 ways to go to the market. So you've seen various ways now. So it is not for lack of strategy that will be your issue now. So you have the tools. They've been given to you, even free. People have spent their resources, and they have now given us this platform and given us and shared their wisdom. So please make the very good, very best use of these. Thank you so very much. So we'll meet again next week at the same time, when we'll then take it a notch higher to look at other currencies as well. And then perhaps we may have other questions when that time comes. Thank you very much. Until next week. Have a good week.
Thank you. Thank you so much.
Thank you.
Thank you so much. We are very grateful for the class.
Thank you.